Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 27th of January. All right, now just having a quick synopsis of the market coming out of New York. As the Asian session starts, like not a real big day on equity markets. No major activity there. I think we are coming up towards the earnings season, so there's maybe something's on hold. The major currencies though did have a bit of a flutter, right? The dollar sort of spiked a little bit higher, then came off. We saw euro, sterling, Aussie, and Kiwi all sort of rally close to 100 points. So or actually sterling rallied 136. Now, there's a couple of things here coming into play, right? Excuse me. If you just look at the news, right, this is where you've got to really look hard at the data. I mean, dollar retreats as riskier currencies recover, right? That's the answer. And that's just a lot of rubbish. So you come back and have a look exactly what's going on. And there's a few things coming into play here. Obviously, yesterday we had the UK employment numbers out. Now, the key data for me is the average weekly earnings, right? This is a major focus for the Bank of England, the last 12 months, really focusing on people's wages. And if that was going up or down, it's going to lead into inflation, stronger retail sales and all this sort of stuff. So to me, that's a real plus. I don't know if it coincided exactly with the move in sterling, but that is a good thing. Here's the move on the dollar index itself, up to 90.60, then back down to 90.20. And it's just having a flutter. Like there's no clear direction. You can see here, actually, if I just blow that chart up just a bit, okay, you can see the price action here around what's going on. It's not fake, but it's very lackluster or artificial almost. It's just hitting the levels, taking out a few little weak stops here and there, not really going anywhere. I wouldn't be surprised to see it back at 90.35 as we start the North American session today. Now, let's just have a look at those currencies because there were, and this is where things have been building up for a little bit, where a lot of these currencies are at the crossroads, and what I say by that is they're either going to go up or down from here, right? We've been seeing these ranges churn out, like in euro, back to the top side, that didn't even test the support line, got pretty close. You can see how sterling they just try to push it through the downside, bounces 136 points. That's like super aggressive, right? And I'd say some stops triggered in the Aussie. Okay, a few short positions put on, and next thing you know, it's 77.5 back to where it was. And Kiwi, which was sort of just basically trading sideways, had a nice clean break through 72.10. So there are good technical moves here on some of these pairs. Other ones, there's not. So sterling is just super strong at the moment, right? But it does appear to me to be reacting to the data. Whereas obviously you look at the dollar index, pretty tight range as it was in dollar Swiss and dollar yen, right? And we did see a bit of a pullback in on the weak dollar on dollar CAD. So that's back in the range as well. And you'd expect that to sort of really start to kick into gear. So what does this do for us? Well, at the moment, this sort of rebound into the ranges isn't like awesome straight up. I mean, if anything, the significant move there on the Aussie, you're just adjusting the trend lines to the new highs and lows, looking for the next opportunity. Now, there are no real highs here on sterling. And we've had a recent high, but there's no resistance trend lines is what I'm talking about. Euro, with the way it's sort of bouncing around there, I'd be more inclined to probably just adjust the trend line and leave that Kiwi one where it is. The others are all pretty much exactly where they need to be. Now, coming into today's trading, you're really trying to knuckle down. This is where we sort of start to get into the business and where the dollar can hopefully find some clear direction. Now, I'm starting to look at the data a lot more, okay, just coming back in and having a close look. Now, not a big difference in the consumer confidence numbers out of the States. That's a little bit of a shame. That could have really kicked things in. Today, the Asian session, have a look if you get time at the Aussie Cpi numbers. Now, the CPI has been pushed to the back. I mean, employment seems to be the major focus during this, not really the end of the pandemic, but down in Australia, things have not been that bad for some time. So I would expect a big spike in inflation because everyone seems to be buying lots of things. So we want to see if that variation in the numbers actually impacts the data. But that aside, the key thing for the next 24 hours, or today, just in general, is the Fed meeting. You want to have a close look at this. The Fed gives us a chance to have a close look at the what they're thinking. Good to get them back on the airwaves, especially now the US election's out of the way. So that's where I think the next major move will come from. They've got no sort of authority over that US stimulus package, which is being nutted out in government. So they may have to just sit and wait, right? Now, the dollar index pushing both sides of the range here. There's no clear momentum at this point. Now, ideally, I would be looking very closely, and if I just change over to my risk page, looking very closely at the equity markets. Now, you can see the futures up here going into the positive, okay? Pretty, well, sort of neutral to slightly negative day here for the rest of the US equities, although the NASDAQ was slightly up. So maybe a bit of a balance there. And we're looking for some continuation. But if you look at the US dollar, or the US dollar relative strength, right, against all the other currencies, there's no significant moves. The dollar index is the main one at 0.24%. The rest of the majors are all in the middle here, right? So hardly moving at this point. And that's what pretty characteristics of the Asian session these days. So as you come into Europe, keep an eye on the data. The Fed meeting, it's important still. Hopefully we get some direction from those guys and we start to see some clear dollar direction. Otherwise, we're going to have one of those weeks where the currencies just sort of flutter around, you know. They give us a few prospects, but don't really deliver. So you have to sort of hang tight on that. And that's all she wrote for the moment. You know what? If we get something disappointing from the Fed, dollar weakness might be a good thing because we've got some levels on plenty of currencies. So just keep your eyes on your fries. Keep an eye on the US equities and also the Fed. All right, guys, have a good one. Cheerio.